This is the Daily Market Comment at xm.com by Rafi Boyatian. I'm Cristina Marujos. The Reserve Bank of New Zealand surprised markets on Wednesday by delivering a hefty 50 basis points cut in its official cash rate, confounding analysts and traders who were expecting a smaller 25 basis points cut. Investors are now pricing a more than 70% probability that the RBNZ will cut again in November. Both the Australian and New Zealand dollars have fallen versus their U.S. counterpart in their latest downswing that began on July 19th. Unless the U.S. Federal Reserve also signals that it will too start cutting rates more aggressively, the Aussie and Kiwi's near-term outlook is unlikely to turn positive anytime soon. The Chinese yuan came back under selling pressure on Wednesday after the People's Bank of China set a slightly weaker midpoint from Tuesday's fixing. The slide unnerved investors as a further depreciation in the yuan risks triggering an even tougher response from the Trump administration, who on Monday decided to label China a currency manipulator. This gave rise to some safe haven demand, pulling the yen and Swiss franc higher from yesterday's lows, though the moves were limited as there was evidence Chinese authorities were trying to stem the yuan's decline. Reports suggested Chinese state banks were carrying out buy-sell swaps in the onshore market to put a squeeze on dollar supply to curb yuan short selling. The latest stock market rout appears to be easing after Wall Street's strong performance overnight. The S&P 500 closed up 1.3%, ending a six-day losing streak. Major indices in Asia were mostly positive, though Chinese shares gave up earlier gains. But a positive start in Europe points to a broad but limited improvement in risk appetite. Risk sentiment was lifted late yesterday from comments by the White House economic advisor Larry Kudlow, who said the U.S. still intends to hold talks with Chinese trade negotiators in September, rekindling hopes that the tensions could yet abate. The optimism wasn't enough, however, to ease expectation of sharp Fed rate cuts, and gold climbed to a fresh 6-year high. Thank you for watching the Daily Market Comment at xm.com.